Okay, good evening, everyone. Welcome for tonight's webinar. Today, it's all about psychological numbers. Okay, so psychological numbers, in other words, or also known as whole numbers, right? So that could be like in gold, for example, 1,000, 1,100, 1,200. Okay, 1,500, 2,000, and so on and so forth, right? So, uh, in trading, this is also being used as support and resistance uh, of when big institutions wants to participate in the market. Okay, so you will notice in the chart in this psychological numbers price tend to respect this, okay, or react to these areas, okay, in the chart as you will see later on. So, okay, so for the main content, what are psychological numbers? Its characteristics of psychological levels, how they affect trading, okay, and the logic behind this, okay. As I've said, the banks, big institutions, okay, enter the market when they reach these levels, okay. Trading strategies with the psychological numbers, it's risk management, all right. The common mistakes and some keys, okay, and some weekly market analysis as we finish the slides today, okay. So let's start. All right, so as you all know, we have our 50% deposit bonus, where you deposit 100 you get 50, 500 you get 250, $1,000 you get $500 extra, huh? How nice. So avail, my friends, okay, and spread this to your friends, your family who, who are interested in trading, or they might want to start with trading and they can have this very nice 50% deposit bonus. All right, let's go on, let's move on. Okay, what are psychological numbers? All right, a psychological number in trading is a price level that is considered significant by market participants. All right. So, not because of inherent fundamental value, but due to collective perception and behavior. Right. So, when we talk of such thing, for example, okay, for example, when you ask someone or both of you are traders, okay, and then when you talk about such thing, you always remember some whole numbers in your mind, like 1,000, 2,000, because these are like milestones, right? When you reach such a price, you will always remember this. Like in Bitcoin, okay, when it reached 100,000, you always remember this price, right? Because yeah, it's psychological. Everyone will remember this. Okay, when it was 60, when it reached 70, something like this, right? So that's psychological numbers, all right? These levels are often round numbers like 1,900 and 2,000 on gold and 1,200 on Euro USD, all right? Or historical support and resistance points, okay? They tend to attract increased trading volume and act as barriers where prices might pause or reverse, right? So it influencing buy and sell decisions, right? Because when you reach these levels now, uh, you get to react to this, okay? And from there on, you will decide which your trades may be. So why they matter? Institutions and traders pay attention to them. which is true. For example, in gold, we are now in the 4,500, right? And then the next milestone will be 5,000. So your mind is somewhere there. Who knows? It could reach 5,000 in the future. So this is what I mean. All right. So moving on. All right. Characteristics of psychological levels. Okay. Round numbers. Okay. Prices that end in zeros. Okay. 1.2 thousand or 2,000 are easily processed and remembered by traders, making them significant reference points, right? It's also historical significance, like levels where the market has shown strong reactions. And you will see that in the daily or in the 4 hour, and you will see prices just playing there or in a sideways motion because, okay, so it has shown a strong reaction in the past. Support or resistance gain a collective psychological importance, right? So, what else? Collective perception, the perceived importance of these levels comes from the shared belief and behavior of many market participants, okay? Not just one trader, which is true. Okay, I remember when gold reached 3,000 to 4,000. Okay, many are just surprised, amazed of such prices, gold hitting such prices. So, what else? Okay, how they affect trading, support and resistance. Psychological levels, okay, often act as areas where price action stalls or reverses, right? Yeah, because yeah, psychological. When it reach 4,000, okay, in gold, for example, then people will remember and it is reacting to these areas, right? And okay, serving as support or resistance points. Trading volume, they attract increased attention, okay, leading to higher trading volumes as more traders execute buy or sell orders around these levels. Okay. Okay, it's also acts as an entry and exit points, right? When you reach such level, they will either exit the trade because they've reached this milestone, okay, these prices, or some will enter there, okay, and trade from then on. Traders use these levels to set stop loss orders and take profit targets, right? This is a very logical thing to do. Whole numbers, you will put either your orders there or your stop or your take profits, right? So market sentiment shifts. Okay, a significant breakout from a psychological number can signal a shift in market sentiment and a potential change in its role from resistance to support or vice versa, right? So that's basically very easy to understand, and I hope you're able to get this. Huh? All right, moving on. Okay, the logic behind this. All right. So human psychology prefers round numbers. Let's let's all admit this. Okay, for example, if you want to ask for some money to your brother, your sister, your parents, your friends, okay, you will not say, give me $9 or 9 pesos. You will ask for this round number like 10 peso, 20 peso, 30, 100, right? Because this is a very normal thing for us. All right. So the same with the trading. Large traders place orders at these levels, right? That's a logical thing to say there. All right, it acts as strong support or resistance. Okay, price often bounces or reverses near these numbers, right? That's the logic behind the psychological numbers. Okay, and what else? Okay, trading strategies with psychological numbers. Okay, there's the breakout strategy, right? For example, in 2000, gold, okay, gold breaks the 2000 mark, then what's the logical thing to do? It's to go up. You are thinking of going like to 2,500 to 3,000 in the coming future, right? So trade above or below the round numbers, right? Reversal strategy. Sometimes it also gets you thinking to trade the reverse. Okay, enter on rejection or the near the key level. So when it reaches the 2,000, some will say, "Oh, it will now drop to 1,900, 1,800." And you can all see this in the chart, right? So these are the strategies when we reach these psychological levels. Confluence strategy combined with trend lines or indicators, right? And what else? The risk management. Always use stop loss above below the round number, right? That's the most logical thing to do there. When you reach these levels, okay, uh, you put your stop loss below this, right? And so you can target the opposite direction to the upside and reverse to the downside. All right. It's avoid false breakouts. Okay. Avoid false breakouts. Sometimes you will see the candle going to these levels. You need a body candle close when you reach this level. Okay. Make sure it's body candle closing there, either most especially in the higher time frame, right? Hello, Mr. Eduardo, sir. Welcome to the webinar. Huh? Thanks for joining. So when it reach these levels, make sure it's having a body candle close. Okay, because that's where you will confirm that this price is about to continue. Okay, there's a continuation move to the upside or to the downside, depending on the bias. All right, wait for confirmation before entering the trades. Okay, that's very important. Huh? Don't forget. What else? Okay, this is an example in the XAU USD chart. Okay, you see, this is the 2000s, right? This is the 2000 price when it was $2,000 that time, and this is the 1900, right? So as you can see, from 1900 to the 2000s level, it's staying there. Huh? This is on the daily. This is on the daily chart. So price is just staying there for many days before it goes back to the 1900, right? Didn't you notice this? And then when it reached the 1900, it will react there. Okay, some like, I don't know, 5 days there reacting to this level before it managed to push up. And when it reached this level, near this level, it again reacted there and went back to the 1900. And it's doing that, reacting, and then going back there to the 2000. So see, it's been months, huh? April, okay. It started in March even, okay. Then April, it reached somewhere there. By May, it started to go down. By July, it's starting to go up there. And this is taking months, even a whole year. Okay, from this year to this year of April, okay, there's the month there. This is April of another year. So price is just going in the psychological levels, okay? And you will see this one in action when we go to the live example, okay? So this is an example in the Euro USD, okay? It was 1.10,000 before, okay? So it's going there, you see? When it reach this level, it will react to this psychological number. And then this is also going for months, huh? You see, and going there, it's acting as support and a resistance in the chart. So that's what I'm talking about when we are trading psychological numbers. Okay, this is a very good level where you can decide either to react to this, and you will see some confirmation there when it will go to the upside or it will reverse down to the other direction. Okay, you just have to wait for the candle patterns like bearish engulfing, bullish engulfing, then you can enter and capitalize on the way. This is thousands of pips, my friends. Huh? Very nice. So what else? Common mistakes. Entering too early without confirmation. That's why I'm telling you, when we are going to enter the trade, we need some confirmation, like the engulfing patterns. Okay, it could be a hammer. Okay, anything to confirm to you. Okay, your indicators, your MACD, your trend line break. So all this will add uh, to your trading strategy. Okay, that will give you the edge. Okay, ignoring higher time frame context. This is the also one of the most important. Okay, always check the higher time frame, because the higher time frame will really confirm to you that it is going. So for example, monthly is going up, weekly is also going up, but the H4 is going down. So why are you going to buy when H4 is still going down? So you have to align all these three time frames so you can have a much better trade, right? Hello, Mr. Caesar. Welcome to the webinar. Thank you for attending. Hope you can catch up. So always remember the higher time frames, my friends. Okay, I am telling you, for me, uh, in day trading, okay, okay, if, for example, in the start of every month, okay, I will always check the monthly. All right. And but as we go along, okay, I will lessen to check the monthly. I will just now focus on the daily. Where is the daily going? Because now I have the idea where the monthly is going. Now only the daily. I will focus there, and if it's aligning with the monthly, then that's good. Then H4, if it's also aligning with my daily, then it's much better. So that's what I'm talking about. All right, always uh, base your bias in the higher time frame. Okay, over leveraging. Okay, at psychological levels. Also, at these levels, all right. Always remember that over leveraging at these levels is very, very dangerous. Okay. Uh, because it will highly have a reaction there, and always you will always see this on the left side of your chart. Okay, depend whatever time frame you are there, always look at the left side, always look to the left. You will see where the high points or the low points, and from there you will plot your support and resistance there, and you will see where these things are bouncing back and forth, right? Hello, Mr. Parker. Welcome, sir. I think you are a newbie. I think it's our first time to see you here. Thank you for joining, sir. You can have an engaging conversation, dialogue with us. If there's any question, please uh, say it on the chat. Okay. All right. So always don't do those common mistakes. All right. Entering too early without confirmation, ignoring higher time frame context, and over leveraging at the psychological levels. All right. Moving on. Okay. Psychological numbers, okay, equals strong magnets for price. Don't you notice this? Like in this example. Sorry, I have to refresh. Okay, just look at this example in what happened. God, what happened? Okay, look at this example. Okay, when in the Euro USD, when it reached this level here at this 1,000, 1.1, 10,000, it was here. Okay, it's rejecting this level, right? And where do you think it's going? It's going back to this level at 1.05 thousand here. You see? And when it reached this, it's reacting to this again, and then it went back there. Why didn't go back there? Because that time all the traders had agreed that we cannot go any further. We agreed to this price, so it was going sideways for many days. Okay, this is in a daily, this is in a daily time frame. So they did Everyone agreed that we're not going anywhere. We're just going sideways for so how many days. There's a battle here of buyers and sellers, and until one was overtaken, and now they are going to the downside. So that's what I mean. Okay, so psychological numbers is okay, strong magnets for price, useful for support and resistance zones. Very easy to understand. It's all bouncing there back and forth. Trade with confirmation and proper risk management. Of course, to each his own. Maybe you have your own risk management. Maybe you are risking 10% of your capital. Then it's all up to you. It's your money. But I'm always giving you the advice here, like at least risk 1 to 2% of your capital, so to protect you. All right. And what else? So that's it about the psychological levels. Okay. Now, as for the weekly market analysis, okay, as you all know, the price of gasoline and gold is just going to the roof. I don't know when are they going to go down, especially the gasoline or the diesel. Okay, it's just getting crazy. But there are some days it's going down. Huh? Yes, I think yesterday it went down a little, but again it's again going up. So there's this daily battle of price hikes. So let's see. Okay, market volatility amidst geopolitical and monetary policy tug of war. So let's all read this very fast. Okay, in the short term, the market will continue to be influenced by the noise of the Middle East geopolitical and U.S. economic data. So as you all know, the Middle East war, okay, U.S. Israel were against Iran, and it's all making all this mess now in the market. So we expect gold, crude oil, and the U.S. dollar to maintain a high volatility oscillating pattern. Huh? Always take note of this, my friends. Okay, who knows? So when we wake up tomorrow, it will now reach 5,000. The gold will reach $5,000. Can you imagine this? Yes, I know gold is going up, but not that fast. Okay, like from 3,000 to 4,000, and from 4,000 to 5,000 in just a matter of months. This is just crazy. So in the medium to long term, okay, the Fed's rate cutting path and the global de-dollarization trend will be fundamental factors determining asset price movements, right? So as you all know, gold and oil and the US dollar are all because gold prices fluctuated violently within the 4,700 to 4,800, all right? The Middle East situation provided safe haven support, but hawkish Fed expectations surpassed prices. Yes, this is a very common thing now. Okay, so gold is just very volatile since uh, years ago. Okay, and now it's more volatile because of these geopolitical tensions. Oil now also is, as I've said, it's now reaching $100 a barrel. And if you will trade oil, it's all up to you, my friend. But I tried trading oil. I still cannot understand, but I'm sure the concept are the same there. Okay, but some are trading oil, some are trading gold, some are trading both. But for now, I'm only trading gold. It's all up to you. I'm not telling you not to trade oil. It's also very profitable. But as you all know, if oil is going up, so why not? Huh? Very nice. And the US dollar, okay, the US dollar index, okay, oscillated between 97.50 to 99.15. It faces pressure when safe haven sentiment rises and finds support under high interest rate expectations. All right. So these three are all going up to these days. And as you can see here, okay, there's the gold. It went to a V-shaped formation. It went to 4,700, but now it's recovering. I don't know if you can call that recovering. Why it's constantly going to the upside. And now it will reach 4,000 in a time soon. Okay, so the core insight here, this week's gold price movement was highly dramatic. It initially rose on ceasefire expectation, then fell under pressure from strong US economic data and hawkish Fed signals. On the key event date, 22nd of April, gold plunged sharply. That's why in this past weeks, okay, or we were all selling because trend is going there and it's multiple bearish factor, but rebounded quickly as tensions is. Yes, it was now going to the upside again, and we are now trading to the upside, ultimately recouping most losses, indicating fierce competition between bulls and bears. So that's it. Uh, what else? Okay, some oil. Okay, you can see the oil now going to $100 per barrel. Just actually, I don't know. The prices now, I don't know if we if we will not have a very good income or or livelihood in the coming days, months, I don't know where this will take us. So as you all see here, okay, the reason for early, okay, affected by the US signal of opening the Strait of Hormuz, as you all know, maybe you are all hearing this in the social media, to commercial ships and rising expectations of US-Iran negotiations, the market risk premium fell rapidly. So, as you all know, when you are watching the news or reading the news daily, and this will not be a news for you, okay? We all know prices are just going to the roof these days, okay? What else? Okay, the dollar index oscillates between, okay, as I've said, you can see all it all here. As you all know, gold is a safe haven, so many countries are still keeping their gold, buying gold, because in such crisis, okay, this will be a safe haven for them, for their economy, and this will protect their economy in the long run. But as I've said, gold is the standard, okay? That's why they can print as many money as they want or paper bills as they want, but without gold, it's nothing. And that's why uh, tensions in the past happened many times because of this. Huh? Okay, now, as you all know, Algoter is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algoter is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. So we can read more about this, my friends. Let the numbers talk, as you can all see there, and spread the same to your friends and your family. It's very easy to share the website, okay, where they can learn more about this amazing company. All right, my friends, share it with your friends and family. What else? And copy trading. Okay, copy trading lets you automatically replicate the trades of expert traders in real time. When they buy or sell, your account does too. Start with only $100, right? You could all be busy, okay, in the day. You don't have time to trade, but when you have copy trading with you, it will all do this for you automatically, okay? Earning money on the side when you reach home and you check your phone. Now you've made, who knows, $50, $100, which is nice, right? Daily, yeah? So please contact our Algotra managers and they will assist you about this, and don't hesitate to contact them. All right, my friends, share this also to your friends and your family so you can avail this. Okay, and thank you for everyone who availed this copy trading feature, and hope more will avail the same. All right, my friends, Mr. Eduardo, sir, Mr. Parker, Mr. C, please avail. Avail. And we also have some insurance program here, okay, where you keep 100% of any profits you make. Originally, this was 1,500 to subscribe, but for only now, for a minimum of $500, you can start this insurance program. And as you can see here in this table, there's a 6,000 sweet spot here with a monthly return of investment of 26.79%. And some, excuse me, some perks here like daily to 5 signals and some 24/7 trade support. Okay, contact our Algoter managers and they will explain to you in detail of this insurance program. All right. So do that, my friends. And as you all know, Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in CFD trading, Zoe offers a diverse range of financial products, including forex, precious metals, oil, indices, and US shares. Zoe is fully regulated, offering a secure professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. All right. Available in Google Play and App Store. There's the QR code. Scan it now. All right. Especially to Mr. Parker here and Mr. Eduardo. I believe you are new here. Please scan this now with your phones and install this Zoe app because this is where we are trading. All right, in your either you're an Android user or an iOS user, please download this now. All right, and use the Zoe app because this is also powered by TradingView. All right, very nice, very nice. So, all right. Moving on, lastly, we have our 50% deposit bonus where if you deposit 100, you will get 50, $500, you will get 250, 1,000, you will get $500 extra. Who will give you $500 extra? Even your brothers or your sister, your friends will never give you $500 extra unless they're a very rich person, all right? So please avail of this, my friend, okay? This may go fast or maybe by next webinar, this will all be gone. So avail now. I spread this to your friends, your family. This is the chance of a lifetime. I dare you find another broker who will give you 50% deposit bonus. All right, but Algoter is there, so take this chance. All right, my friends, and hope you will avail. And that's the end of the slide here. Now we can go to the chart and see this in action. Okay. All right. Psychological numbers. So, okay, don't mind this thing because these are news, high impact news in the USDJPY chart. Okay, now we're in the daily. Okay, daily time frame. What do you notice when we're talking about psychological numbers? For example, it reached this area. Okay, this is in the daily time frame. Huh? It reached this area, so mark your support and resistance there. Okay, this area here, okay, it started there, it bounces there, it's reacting to this, right? It's reacting to this level. So this is a psychological level, okay, and it's in ranging from 160 to 161, somewhere there. So to get to be exact, okay, you will double click that coordinates, and we will change this to 160, right? Round number, right? And three zeros. All right, that's it. It should adjust. So this is the 160. All right, that's how you will do that. Okay, 160. Okay, do this also. I don't know. 60. So it will be exactly very flat there. Anyway, that's the 160. Yeah? Somewhere there is 160. Okay. Now, below this, it's also reacting in this level. Okay, so draw the same for your support. All right, do the same for your support. So it's playing in around 141, 140 level, right? So do the same there. 140, all right, somewhere there. Okay. Just to see it well. Okay, 140 level there. So these are the psychological levels in USDJPY, okay, in this price point, all right? So now, if you can see this, it's either it will reverse back or continue to the upside. You just have to wait, okay? But now with the MACD pointing down here, then maybe it will just go back in this level, right? But let's see. Okay, okay. So it's kind of reversing, huh? This is also reversing. Okay, let's see some more. So it's going up. Okay, now we are confirmed it is going up. So it's going there. So it's either gonna target here or at least near this area. But since we are in the daily, okay, if you are in the daily time frame, you have the ample time to wait, okay, because each candle here is 24 hours or 1 day. So you will have time to monitor this, okay? You can assign like an alert that when it reach this level, it will alarm you in your phone and you can start trading, okay? So let's see the price action. Okay, so it's going down or sideways. Check what will price action do. Mhm. Okay, MACD is about to make a crossover, and as you can see, the green bars here are becoming lighter, right? It's not a dark green, so this could produce a one red bar here. Now it's confirming that it's going down. So let's see. It's very so the volume now is very low. Okay, this is at the last push. So okay, okay, there. Okay, where is your V level here? This is the V level. Okay, it's starting to break this. All right. If you will, oh my God. Okay, there it is. Okay, you will go to line. Okay, line chart. This is the last V level there. Okay, so it broke there. Okay, that's one sign that it's about to reverse. Okay, and it even broke this V level here. So it's now going to the downside, right? Very nice. Now, back to candles. We need more confirmation. Okay, when you see such, and especially this is in a daily. This is a very big candle. This is this could be hundreds of pips to the downside. So there should be some imbalance happening here. And look at that. Okay, it broke all these lows there, and it formed a what? It formed a fair value gap, right? You all know what is a fair value gap now. Okay, this week there. Okay, this week is not crisscrossing with this week. So there's an imbalance here. There's a gap here. So we drew the box there, okay, from that week to that week. So there's a gap. So 99% of the time, all right, I'm not saying 100%, at least 99% of the time, price will react to this, okay? It will retrace back to this. Now, let's see the next candle. You see, it's going up. If you started selling from here, now you're in a negative and burn your money. Okay, so some reaction there, but let's go now to the lower time frame, like a 15 minute, where we can watch Okay, more in detail of this price action. This 50 minute, this is the fair value gap there. Okay, let's see. So it's in a sideways motion, you see? Wow, if you will be if you will be selling from this point and you will be trapped here for days, like I don't know, this like 1, 2, 3, like 4 days now. So we need a confirmation. Okay, let's play this. Going sideways. Okay, finally it's going back to that FVG. You see, timing is everything, my friend. Okay, we are playing with the daily. It's not a joke. Okay, now at this point in time, okay, we are in a 15 minute, but in the daily, it will only look like this. You see, 4 days, and then it reach your FVG there. So in the 15 minute, okay, we need some what is the pattern we need to see? We need to see the bearish engulfing, okay, because now it's tapping the FVG. We need to see the bearish engulfing pattern before we can place the trade, okay? If you want the 15 minutes is also a big time frame when you're day trading. If you will really want the sniper entry, you need to go to the 5 minute, okay? And look, okay? It could be having the crossover now anytime now. So we just need to have these two confluence, okay, to appear, okay, in our chart. So moving on, I see it's still going up. What? Okay, that's not a bearish engulfing. Moving on. There. Isn't that a bearish engulfing? It's engulfed the green candle there with this red candle. So this could be a very good idea. It's also pointing downwards. So short position. All right. Stop loss there to protect you just above the swing high. You see, now your stop loss is more tight, okay, than in other time frames in the 5 minutes. So now we've reached this point, okay, what you will target. Go back to the daily. What you will target, my friend. This is our psychological level 160 in the USDJPY. This is your next target here, the 140. That's your target there because you already done your homework, all right? You've marked your psychological levels there, all right? And then you see the change of character there, tapping your FBG. In the 5 minute, we entered, we found that bearish engulfing, giving us that confluence with a very tight stop loss. Now all you do is go to the other psychological level. Now we will all watch this in the hourly at least because it will be very long. All right, and let's remove this thing here, show sessions, because it's very okay to not clutter our chart. Let's see if this strategy is really telling the same. Okay, what we have discussed there. Okay, let's move on. Playing now, my friends. How nice. How nice. You see, it's going down. Just as what we've discussed there when trading psychological numbers. now you have to wait for how many days, okay, for this to finish. That's all you have to do. You see? Let's see if this will really hit our target here of 140. Okay, let's extend this. Because you've already seen the pattern. Okay, when it's in reach one psychological level, it will reverse to the other, and now it will target the opposite psychological level there. Okay, to the 140 price. Okay, maybe the 4 hour to be faster. Hmm. And by this time, okay, you are now really getting excited with your profits. So we go down, okay, to see this in action. Okay, we go to the 15 minute. You just have to wait. Almost there. Can you trade such such long time, my friends? This is like weeks. You are swing trading, but just imagine the profits here. Huh? Okay, by this time you are almost there. We should move our target. It will not show up. London session, New York. Wow, finally. You see, from the daily, all right, it will look like this. Wow, very nice, huh? Now, what to do now? Either it will break to the downside or continue to the other direction. But let's see what this is giving us. So this is done. Okay, you did your trader. It's done. Now we go to the opposite direction. But we have to find the confluence. Okay, we need to see if it's going to the upside or to the downside. So for now, it's giving us all this lower low. So it's still going down. Huh? We need to see the change of character. That's the secret sauce there. Okay. So moving on. All right. And okay, we are in Asia. Let's see. Okay. As you can see, where is our last low, higher low? This is the one, right? So it should break this. Did it break it? Yes, it did. A change of character, my friend. Okay, that's the chalk. Always find this chalk. This is the secret sauce, okay? If you can see, the MACD is selling there, overextended there, and now it's made the crossover. So it's reversing at this point and keep reversing, giving us this green bar. So this is now really going to the upside. For now, for all these signs it's giving us, it's going to the upside. So let's move on. Once you find that chalk, what what's the next thing you want to see? You want to see the point of interest. Okay, so what are those point of interest? Either an FVG or or an order block. Okay, so let's find that FVG. If there's, yes, we find a lot. Okay, this one, this an FVG, but now it's mitigated. All right, so what's the next best thing? This. From this to this, it's fresh. It didn't touch that. This one, this is also an FBG there, but it's touched by this wick there. You see it tap, that's already, so less most likely it will not react to there. So this is just our best bet, okay, for the reaction. Okay, now watch carefully how to enter the trade. Okay, as I'm always telling you, I'm always looking for, if I want to go up, I want a bullish engulfing. If I want to go down, I need to see a bearish engulfing. All right, so let's do that. You see, it's reacted to that FVG. Okay, but where is our bullish? Is this a bullish engulfing? No, this is not a bullish. Okay, it's not engulfing anything. So let's keep moving on. Okay, taps the second time, but there's no bullish engulfing. So that's not the thing. So we need to keep moving, okay, until we see such thing. Okay, it's going down. Okay, when you see such thing, it's making the boss, okay, the breakup structure here. Okay, when you see another boss now, you've seen the chalk, you've seen the boss. Okay, let's rename this. Wait. Breakup structure. It is now high time, okay, to get your Fibonacci retracement. Okay, start from the lowest before the chalk all to the highest point there. This is the highest point. Okay, there it is. Okay, why did we bring up this Fibonacci retracement? Look what it's doing, my friend. It's exactly in the golden zone. This FBG is sitting right inside this golden zone. You see, between 0.5 and 0.618, it is there. We need price to go back here and give us that bullish engulfing so we can enter. Let's do that. How nice. But is that a bullish engulfing? No. We need a very good bullish engulfing. Is it a bullish engulfing? Yes, but it didn't tap our FBG. Very good. Now it taps back. All we need to see is a bullish engulfing anytime now. No, no bullish engulfing yet. Aha, exactly inside that FVG and inside that golden zone on the Fibonacci retracement. My friend, what more do you want? Even your MACD is making exactly where that bullish engulfing is happening here. It made the crossover there with the green bar, with that bullish engulfing. in the Fibonacci retracement of the golden zone, inside that FVG, everything is screaming buy. Long position. Stop loss below that loss there to protect you. And what, my friend? Target this? My friend, we are talking about psychological numbers. We will go to that daily. Okay? You've done your homework. We will target that opposite side. We will target that opposite side at 160. How nice, my friends. Let's play this. Okay, you've done your homework. Very tight stop loss. We want to see this in a dramatic fashion. Let's go. Let's play this, huh? MACD is going up. Price is just going up now. You see, did it ever went back to your drawdown? No. Now just have to wait, targeting the other psychological level up there in 160. Let's go to the 4-hour. All you have to do is wait now. Speed things up a bit. If you will notice, these lows are getting respected. Price never went back there. And that's you will know that you are really in an uptrend. You see, these lows here is getting respected, right? Very nice. So keep going, keep waiting until you hit your take profit. Price is just going up. Yes, it went there, but it's just weakening it. Huh? It's not body candle closing there. Okay, let's arrange this. I think we entered somewhere there. Everything is being respected. This low, it's not making the change of character. Okay, somewhere here, some change of character there. But another change of character here to the upside. See, breaking all this. The 4-hour. Huh? Almost there, and there it is, my friend. That is trading psychological numbers. Let's arrange this because it's not giving this. We entered here, right? There, you should see that line. On the daily, it will look like this. How nice. But just look at the past. Look to the left. You see, 160 to 140. It's been doing that. Up, down, up, down, up. Maybe now it's going down. Even in the past, you go to the past, you see, up, down. You are just not seeing this in the bigger picture. So that's how you trade using psychological numbers, my friends. You can always spot this in the chart, in the gold, euro, USD. But in this example, this is USDJPY. Just plot your support and resistance, psychological numbers. Make sure they are reacting on that same level. And once you find that change of character there, it reached that point, giving you all that phase. What is that? Giving you that FVG, that point of interest there to the downside, to the upside. My God, it's very long. What is happening here? 1 hour maybe? There, right? In that Fibonacci retracement, and you can capitalize on the way up there, okay? Bullish engulfing, when you spot that, enter there. And just wait for your take profit to get hit on the opposite direction. How nice, my friends, huh? If you have any question, please do so now so we can wrap up this webinar. Any question? This is a very easy strategy, actually, but it needs your patience. Okay, how many days? This it took months, huh? May, let's see, in the month of May, you entered there. June, July, August, September, October, November, December, and then the next year, January, February, March, by April, it's like almost a year of waiting for this price action. Huh? I'm just telling you the possibilities here. Okay, you've seen it by yourself, by your own eyes, how these things are happening, why it's reacting on these levels because of psychological numbers, whole numbers. All right, my friends. So with that said, thank you all for joining, and I really appreciate your presence here and hope you will avail of our 50% deposit bonus or copy trading feature, whatever is there. Algoter is offered. Just contact our Algoter managers and they will gladly assist you. Okay, my friends? So until we meet again next Tuesday for another secret sauce reveal, thank you. You can always watch this in Algoter's YouTube channel and in your most convenient time and master this strategy. All right, my friends. Thank you again. Have a nice weekend. See you next time. Bye bye.